Taking $300 billion from Russia and giving it to Ukraine may sound like a simple solution, but economically and in the long run, it can be a very costly mistake. Dangerous for the euro as a currency and dangerous for Europe as a financial center. And yet, this proposal, transferring money, these frozen assets to Ukraine, is still being debated. In order to see more videos like this and let this channel grow, like, comment, subscribe. Thank you. The problem is, this is not just about wartime funding. It is about the core of the global financial system. If this precedent is set, investors worldwide may begin to question whether their assets are still safe. After Russia invaded Ukraine in February 2022, Western countries imposed sanctions on Russia. These sanctions froze a major part of Russia's reserves. Not destroyed, not transferred, just frozen. A major part of these reserves are held in Europe, primarily at Euroclear here in Belgium. So far, this debate has been framed primarily in political and legal terms. I'm not a lawyer, so I will not comment on legal terms and only very briefly on political arguments. The Belgian Prime Minister, Bart de Wever, described these assets as a goose that lays golden eggs, suggesting that a steady stream of income may be preferable. The CEO of Euroclear, Valérie Urbain, suggested that these assets may serve as a bargaining chip in future negotiations. These are all important political arguments, but they are not telling the whole story, because the economic dimension has received much less attention. Some say there has been little impact so far. For example, Brett Setzer at the Council of Foreign Relations argues that there has been no visible reaction to the freezing of the Russian assets in 2022, and therefore we don't need to fear anything for the future. Euro, after all, still accounts for 20% of global currency reserves. But this conclusion is incomplete, because it focuses exclusively on currency reserves and ignores the broader picture, including gold and total reserve allocations. If we look at global central bank reserves today, one trend stands out. The share of gold is increasing. Many say that's because of the recent increase in the gold price, but that's not the whole story. Central banks are actively buying gold. This is not a re-evaluation, it's a reallocation. Gold has now overtaken the euro as a share in total reserves. Since 2022, the purchases of gold by central banks have doubled. Central banks now account for 20% of total demand for gold. That used to be 10% in the past. That timing is very unlikely to be just a coincidence. And gold is not the only response. Central banks explore alternatives and diversify further. China increasingly uses alternative financial centers. Chinese listings on Nasdaq Dubai now exceed $27 billion, after $7.5 billion in 2022. SIPS now processes transactions around $30 trillion. And on 2nd of April 2026, a new daily record was reached, equivalent to roughly $178.5 billion. A gradual fragmentation of the global financial system and a potential erosion of Europe's role in it. Not exclusively caused by the current situation, but certainly accelerated by it, because the system is built on trust. Not words, but portfolio decisions. If you found this helpful, consider subscribing for gaining more structured insights into financial markets. Thank you.